today I'm going to show you a step-by-step breakdown on how to analyze the markets the best way. We're not only going to look at technical analysis, we're also going to look at the main things such as fundamentals, things that actually move the market in order to catch the best trades out there. So let's now hop straight onto the charts. So at the beginning, it's very important that I always like to look at the chart on the 4-hour time frame when it comes to drawing in things. So for this one, like I said before, I always start with my fundamental bias. So with this trade, one of the biggest banks, ING, called that they will most likely enter a gold long position in a couple of days. So that was one of my confluences, and the other confluence was that Goldman Sachs was also looking for a potential buy opportunity. And not only that, at that time the dollar was quite weak, which means that we are going to expect a stronger gold in future. Why? Because they negatively correlate with each other. So with those two main confluences, I was ready to look for a potential buy opportunity to take a long position. And very important to know is if you want to learn more about those things, if you want to learn more about real market drivers such as macroeconomics, microeconomics, global drivers, central bank policies, monetary policies, bank reports, and so on, make sure to follow me on Instagram and to join the next generation of traders, because that's a community where I build the future of traders to potentially have the chance to trade with multiple 7 figures with my own investment firm. So if you're ready, make sure to click the link down below. You can also join my Discord to stay updated every single time. So for this trade, like I said, we have our fundamental bias, bank reports, negative correlation with the DXY US dollar. Okay, so now we are going to look at technical analysis. So like I said before, I like to draw in everything on the 4-hour time frame. In this case, I want to look for a potential area where I can look for buys. Okay, so right now we have a blank chart in front of us. So what I can see right in front of my eyes is a beautiful support zone opportunity around this area right here. Okay, because let me show you guys, this right here would have been a perfect support level. I want price to some type of retrace to this area and give us possible buy opportunities for this setup to work. And also, if you want to know how I draw in my support and resistance, how to use support and resistance the right way, make sure to watch one of my previous videos where I have a 40-minute long video on where I explain on how to use support and resistance the right way. So like I said, I like to draw in everything on a 4-hour time frame and then go down to the 15 or 30-minute time frame to look for entry models. So in this case, moving the price forward, we can see that we had some type of rejection. Let me move this away for you guys. We had some type of rejection off of this support area that was being respected very, very good previously. Why? Because we are on a 4-hour time frame, which means price is going to be more accurate, more precise at those levels than a 5-minute, 15 or 30-minute time frame, right? So now that we see some type of rejections, we have an opportunity to look for a possible entry model on a lower time frame like the 15 or 30-minute time frame. So now that we have our support levels, I want to show you guys one entry model that I like to use quite often and which is quite accurate when you apply it the right way. Okay, so for this we have to use my entry Fibonacci, and it will look like this right here. This right here is a perfect prime example of an entry Fibonacci that I like to use when it comes to look for entry positions. So how does this work? When looking for buys, I like to place my entry Fibonacci on top of my support level, of my support market structure. That's where I place the 100% level. And then when it comes to place my 0% level, I like to place it at the top of the wick of the previous highs. Okay, so in this case, it will be right here. And then now we can move down to the 30-minute time frame to look for entry opportunities. So let's now say, in this case, the 88.6, this green line, is the area where we want to enter this trade from. And when moving forward, we can see something, right? Price was showing some type of rejection on a lower time frame around the 88.6. okay, so in this case, I would like to wait. Let me go back a little bit. I would like to wait until price breaks above my 88.6 and shows some type of rejection before going to the upside, which is a perfect buy opportunity for us traders. And in this case, moving price forward, that exactly happened, right? Price not only broke above that area, but also gave us beautiful rejections off of this 88.6 entry Fibonacci level with a beautiful pullback. Okay, so right here, broke above this resistance level of our 88.6 entry Fibonacci level, broke above it, came back, retested it, and this is the area where we are going to enter a buy a long position. Boom, place our entry right here and place our stop loss to one of these levels on the entry model Fibonacci, on one of these three levels. In this case, this would have been a perfect match, a little bit below these wicks right here to give this trade more breathing room. And then we can actually go back to the 4-hour time frame like this and look for a potential move right around our first take profit zone off of this Fibonacci, entry model Fibonacci. Okay, so now we are currently in the trade, right? We are in profit. Price is going to most likely break above this high low and this high low in the future. That's what we want to see in order to have enough confluence that we entered at the right position, because our fundamental bias is also bullish at this time. Why? Because one of the biggest banks called so, Goldman Sachs called so, and we have another fundamental confluence, a negative correlation with the DXY, the US dollar. So moving forward, we can see that exactly happened. We broke above previous lower highs right here, and then a couple of hours later, a couple of days later, we broke above the next lower highs, which is also a great confluence that we will most likely go to the upside and potentially break these highs, break above these highs. And if price do so, then we're good to go. So right here, what can happen is price can pull back to this area. So right now, I will not place my stop loss until break even yet, okay? Because what price can do is give us a pullback right here, reject off the 88.6 multiple times or even of our previous support before it actually makes the move to the upside. So be patient and sit on your hands, because you are most likely going to be in profits a lot of times. Then price pulls back and you are all of a sudden you're going to shake. Oh, I should have put my stop loss to break even, or I should have taken partials. Of course, you can always take partials. You can always take low positions out to secure as much money as possible, right? It depends on you. Your risk management depends on yourself. So right here, we're just going to let the trade run. As you guys can see, there is a pullback. A pullback happened exactly to the 88.6 Fibonacci level right here. So not only that, you could have entered again based off of the rejection off of this 88.6 Fibonacci. So now you could have scaled in with another position to make even more money, of course, if your risk management allows so. I don't like to risk more than 1% of my trades. Sometimes I like to go to 1.5, but usually I stick to 1 or 0.5% for my trades. Okay, so now we're most likely, what we want to see is breaking above this resistance structure to hit our first take profit zone, okay? And in this case, what you can do right now is you can place your stop loss to break even, or even secure some partials. Maybe you can get out of the trade with about 50% right here, because we are already at a strong resistance. So what price now needs to do is to break above and go to the upside even more. And boom, that exactly happened. Price hit our first take profit target of our entry model Fibonacci. So in this case, you can get out of the trade with another 20%. So putting it together, we are out of the trade with about 70%, and you can let the rest of the 30% run all the way until the rest of your take profit zones will most likely be hit on this entry concept, right? We're completely safe. Nothing can happen to us anymore. What we want to see is potentially price to hit all of our take profit zones on this entry Fibonacci, and boom, it's going to take a time, quite of a time, but at the end of the day, that exactly happened, and all of your take profit zones were being hit. Boom. This is one concept I like to use in order to master the art of trading the best way possible. As you guys can see, price then even pulled back to previous resistance market structure and gave us a possible opportunity to enter another position, to scale another position in with this trade. Something like this. You could have scaled this trade like this. Boom. Another entry opportunity for you. This is basically everything you need to know. Trading can get so simple when you trust or when you learn the real market drivers, right? So putting it all together, this trade is a perfect example of what can happen when you apply fundamentals the right way with technical analysis, and that when learning about the real market drivers, you are going to be able to catch beautiful setups, beautiful scaling opportunities like this by yourself. And lastly, what's also very important is to have the right risk management. So I hope you guys enjoyed today's video. If so, please feel free to leave a like down below, comment something, and to follow me on Instagram, because that's where I will update you guys with everything I know. With that being said, see you guys in the next video when it's time to take over the markets once again. Peace.